we are talking about the signs. When we talk about a recession, you bear in mind that actually what underpins it, of course, is the economic data. The data that shows you how the economy is slowing down that eventually could become a recession. So let's call them the canaries in the coal mine. The first signs of trouble, the data that tells economists that there will be a slowdown, because that GDP number is merely a caricature of what else has come before. So let's talk about consumer confidences. And we've had numbers on consumer confidence. One of the New York Fed says consumers now expecting higher unemployment and inflation, and therefore they're slowing down the spending. If that slows down the spending, then the economy starts to slow down as well. New home sales fell very sharply, down 10.5% in January. That could be a significant move if that continues out for construction and indeed for banking, etc. And then if you just talk about manufacturing, the ISM survey came in lower than expected last month. Anything below 50 is a contraction. These are, if you will, the plumbing, the canaries. Julia is with me, Julia Coronado, the president of MacroPolicy Perspectives. Now, nothing here says there's a recession in the way, but if the totality of all the incoming data does suggest that a slowdown's happening, whether it goes into recession is somewhat waiting to be seen.
Absolutely. And you've highlighted the multiple dimensions of uncertainty, and those are not easing up. So we know what we know is that the multiple fronts of policy uncertainty and disruption are leading to anxiety amongst businesses and consumers. And sentiment isn't always a leading indicator of spending and actual decision making, but we don't see any let up in that uncertainty. So it's just a very difficult environment for businesses to make CapEx and hiring decisions in. And what do? You wait and see. And that tends to slow the economy.
Right. And one of the issues, of course, is the economy. Despite what the president says, the economy was doing really well. Inflation was down,
Really
unemployment was down, interest rates were coming down. Yes, if you want to talk about some macro grand economic vision of the US, the deficit was too high and the terms of trade and the trade balance was off. But that could have been addressed in a less violent or aggressive fashion.
Indeed. There are multiple ways to address the fiscal unsustainability over time. And in fact, as you note, actually, the deficit dynamics were not deteriorating. They had been stabilizing. They had improved from the pandemic and then stabilized because the economy was so robust. Profits were high, incomes were solid, generating revenues. And this is, I think, one of the canaries that is going to be very challenging for the Trump administration. A lot of their efforts are around containing the fiscal situation. But Richard, you and I know that one thing that's terrible for the deficit is a recession. You start to lose the revenue side of the equation if you cut too much and too aggressively on the cost side of the equation. It's a delicate balance.
I guess, if I talk about macroeconomic change that leads to a recession, but ultimately restructures the economy on a much better footing, I think of Thatcherism in the 1980s, arguably Gerhard Schröder in Germany. You think of Reaganomics, all of which did root and branch surgery on their country's economies. Why is this different?
Well, because I think it remains to be seen whether it's different. What we're seeing in the policy approach is a lack of vision. So, for example, we all knew that there was a vision on narrowing trade deficits, reshoring some activity, but we're going after our biggest trading partners. The US is going after Canada and Mexico in ways that aren't directly tied to particular industries that we're wanting to bring back or reshore. So it's very difficult to see what is the vision here for the industries that we're trying to address, or the partnerships that we're trying to modify or renegotiate, we're really going after our closest friends, both on a foreign policy level as well as a trade level. And that feels a bit profound, like a more of a profound change without the clear vision of what we're trying to achieve here.
I knew there was a reason we needed to speak to you tonight, and you've just given us the succinct clarity that we needed. Thank you, Julia. I'm very grateful to you. Thank you.